Hello everyone, welcome to Investors Meeting Point. In today's video, we will present the latest performance review of Larsen Toubro Ltd, one of the India's premier engineering and construction giants. As a diversified conglomerate, L&T spans multiple high-growth sectors, and we will be exploring what makes this stock as an attractive buy for equity investors right now. We will walk you through a comprehensive financial analysis highlighting L&T's recent quarterly performance, projected revenue growth, profitability metrics, and order book strength. We will also discuss the company's expanding international footprint, its future growth strategy, and the impressive capital efficiency it offers to shareholders. Revenue segmentation of L&T. L&T is a prominent engineering and construction conglomerate with diversified business operations across infrastructure, energy, IT and technology, financial services, and high-tech manufacturing, each contributing significantly to revenue. The segment-wise revenue distribution highlights the dominance of infrastructure followed by energy and IT and technology, underscoring L&T's strong market presence and diversified revenue base. This mix ensures resilience and stability, providing an attractive growth of foundation for equity investors in the infrastructure and industrial sector. The key financials of L&T. L&T reported significant financial growth with revenue reaching 615.5 billion by strong international execution. EBITDA rose to 63.6 billion while PAT grew to rupees 34 billion. These gains despite a marginal dip in EBITDA margin due to one-time effects underline L&T's capacity for sustained growth and profitability, making it an appealing investment. The year-over-year comparisons in this quarter's financial demonstrate the company's ability to capitalize on both domestic and international market opportunities effectively. L&T's revenue growth trajectory is driven by a robust order pipeline, including domestic and international projects, especially in infrastructure and energy. The forecast reflects management's confidence in achieving sustainable growth backed by strong project execution capabilities and new sectoral opportunities. This continuous growth outlook underscores L&T's value as a stable investment option, promising steady returns. The company's profitability margin growth reflects L&T's efficient project management and cost optimization strategies across its business segments. Profit after tax is also set to grow significantly, driven by higher revenue and margins. This increasing profitability and enhanced margin profile make L&T as a compelling investment for investors focused on operational efficiency and long-term profitability. L&T's earning per share is forecasted to increase substantially, reflecting the company's effective capital utilization and profit growth. This increase in EPS demonstrates L&T's capability to enhance shareholder value driven by revenue growth and margin improvement. Such EPS growth is attractive for investors, providing confidence in the stock's potential for value appreciation, making it a strong candidate for long-term investment in the infrastructure and industrial sectors. L&T's return on equity and capital employed are set to improve significantly. These increases are the result of improved profitability and efficient capital allocation across projects. Such upward trends in ROE and ROCE highlight L&T's effectiveness in utilizing shareholder funds and deployed capital to generate high returns, reinforcing its attractiveness as an investment. L&T's order book totaling Rs 5.1 trillion as of Q2 financial year 24 is well diversified across domestic, that is 60%, and international, that is 40% markets. This composition, with significant exposure to high growth regions like Middle East, provides revenue stability and growth potential. The substantial order backlog spread across infrastructure, energy, and other key sectors positions L&T's to benefit from favorable market conditions globally. L&T's international revenue grew by an impressive 46.4% year-over-year, primarily due to robust project executions in the Middle East, while domestic revenue increased by 1.3%. This trend underscores L&T's strategic success in expanding its international footprint, which mitigates risk associated with domestic fluctuations. The considerable growth in international revenue highlights L&T's competitive advantage in global markets and adds stability to its revenue base, making it as a reliable investment option. L&T's diverse business segments demonstrated strong performance with infrastructure generating the highest revenue and strong EBIT contributions across segments. Energy and IT technology services also delivered significant revenue and EBIT, underscoring L&T's diversified revenue base. The high EBIT from financial services and IT and technology reflects profitability in these segments. The solid segmental performance indicates balanced growth potential, enhancing L&T's investments appeal by offering exposure to multiple high-performing sectors. L&T is expected to allocate significant capital expenditure over the coming years, with Rs 91 billion in financial year 24 and continued investments of 25 to 35 billion annually through financial year 27. These funds are directed towards high-growth areas like renewable energy, data centers, and new manufacturing capacities. This strategic capital allocation supports L&T's long-term growth trajectory and prepares the company to capitalize on emerging opportunities. Investors can view these planned expenditures as essential step in sustaining competitive advantage and expanding L&T's market reach. L&T's cash flows are projected to remain strong, with operating cash flows increasing from Rs 182.7 billion in financial year 24 to an anticipated Rs 199.8 billion by financial year 2027. Free cash flows is expected to grow in parallel, enabling L&T to support its capital expenditure without compromising financial health. This healthy cash flow outlook indicates that L&T can fund growth initiatives while maintaining a stable balance sheet, an attractive attribute for equity investors focusing on cash-generating firms in capital-intensive sectors. L&T's valuation metrics are set to improve as earnings increase, with the P/E ratio expected to decrease from 36.1 in financial year 24 to 19.6 in financial year 27, reflecting the company's enhanced profitability. This trend in valuation metrics indicates that L&T is becoming increasingly attractive from a growth at a reasonable price perspective, as its earnings expand while the valuation metrics becomes more favorable. For investors, this decreasing valuation trajectory is paired with L&T's growth potential, reinforces the investment case, providing a compelling opportunity to enter at a stage where valuation aligns with significant future growth.